Hello, everyone. Welcome to this webinar today when we're looking at offering SME funding as a diversifying strategy. I'm Peter Towers, Managing Director of ESS BIZTOOLS, and I'm joined today by Dale Crosby, the Managing Director of a number of organisations, Dale, PDF, and so we'll just say good day to you,
Hi, Peter.
Dale. How are you?
Very good, thank you.
And we're going to be talking about this small business funding issues today, and I'm looking forward to that. And if we just go back to the diversifying accounting services, why? What's your firm's point of difference is an important question that accountants need to answer if you're going to be able to implement a diversified service. Have you created any industry specializations? And what could they be in? Well, they could be in the wool industry, or beef industry, or horticulture, or medical practices, specialized tradie type businesses. There's a whole range of businesses that you may have decided you could have some industry specialization. And what do I mean by industry specialization? My interpretation of it is you need to be able to dig below the profit and loss account and the balance sheet and the tax return. What happens in the day-to-day operation of the business? Because if you were the full-time CFO of those businesses, it would be an expectation on you that you would have undertaken those types of tasks, that you would have understood the costs, the manning, the productivities that are being achieved, and then to design reports so that that information is fed back into management. This is what I mean by industry specializations. You can do it. I learned the meat industry many years ago as a young accountant, and I knew nothing about meat other than what a rump steak tasted like. Are you an expert? You may have already developed some expertise because of your involvement with clients. It could have been real estate agents, it could have been medical practitioners, could be pharmacies, could be jewelry stores, could be franchise type businesses. Are you an expert? Could you make a presentation? The Accounting Market Pulse report that the CommBank produced in May this year indicated that on the firms that they surveyed, and they indicate that those firms are small, medium and large firms, not the big four, but the other that are classified as large. And most of those firms expect to diversify their services over the next few years. In fact, only 5% said that they would not be diversifying. So that's a very interesting analysis, isn't it? What's your firm doing? Are you going down a diversification path? This is a series of webinars that we're running at ESS BIZTOOLS with assistance from our affiliates and some other people out of other industries. Next month, we're going to be looking at the crowdsourced funding intermediaries to get their thoughts on accountants diversifying services. And today we have Dale Crosby with us. It's going to be looking at SME funding issues. In that survey that CommBank undertook, Business Advisory Services was then nominated by the firms that participated as being the highest rating area for new services. In fact, it was significantly higher than any other activity that was nominated. So small business funding, I think, is a significant area that you could look at as a diversified service. And Dale Crosby is the Managing Director of CPD for Accountants, who present self-paced e-learning courses. So I'm now going to invite Dale to start this presentation today. How are you, Dale? Are you right to come on now?
Yeah, absolutely, Peter. Hang on, let me just put the screen on. So can you see my screen?
Yes, thank you.
Brilliant. So no, that was a really good introduction, Peter. I'm I mean, my passion in business is helping accounting and advisory firms add value to their clients, and diversification in one way or another is a big part of that strategy. I'm interested in your question, are you an expert? And I've got two sort of thoughts of mind in relation to that. I think to a large extent, accountants in general practice are great generalists. They're certainly an expert in doing tax returns, and they're an expert in engaging with their clients. But in reality, when you look at what they do on a day-to-day basis, hopefully it's to help clients make the right decisions, right financial decisions for themselves and for the future of their business. And in some cases, this involves providing some expert advice, mostly around tax and compliance, but it might also be in relation to things like financial planning or small business funding, or a whole range of things. And through CPD for Accountants, we provide support to accountants, administrators, managers, partners, all of whom are trying to engage with their clients at a deeper level. It's a real challenge. And I think, the old adage that we've heard over the years that, we need to start diversification because compliance is disappearing is clearly wrong. Compliance isn't going away, but diversification is definitely a hugely important part of adding value to our clients. So whether or not we're looking to become experts or not, and Peter, I'm interested in your feedback on this, whether we're looking to become experts or not, the important thing is that we're having conversations with clients. And I suspect over the last 12 months, we've had better conversations with business clients and probably longer conversations than we've had for many, many years, all around the challenges that they're having getting through COVID-19, with some businesses being forced to stop trading, other businesses trading in completely different ways. Some businesses having to restructure, others even considering, the possibility of liquidation. And through those conversations, issues relating to cash flow and funding seem to be coming up very regularly. So in collaboration with Peter and with another colleague, we've decided to look in a little bit more detail at the options for small business funding. Given the audience is accountants in general practice, and some of you might already be working as virtual CFOs or specialist advisors to your clients, you're probably having some of these conversations anyway. And no doubt you are aware of the different sources of funding. I think the challenge you've got is deciding, are you engaging with your clients in such a way that you're helping them to make the right decisions about their need for funding in the short and medium term, and whether they're going to pursue, or what options they have, I guess, to pursue different types of funding arrangements. We've developed a course which we'll be launching in about 6 weeks' time on small business funding. And I thought today we'd just briefly go through some of the key elements, the considerations that we need to work through, and discuss how we have these sorts of conversations with our clients. I'm not an expert on small business funding, so first thing I'll put my hand up and say I'm not the expert. And Peter, I'll certainly be asking you a few questions about equity funding arrangements, because I know you are an expert in this area. But I certainly rely on other people to provide that expert advice. But as a qualified generalist, I'm interested in having those in-depth conversations with clients. And I think that's the most important thing. Are we able to ask clients the right questions about their needs? Are we able to challenge them? I'm at the moment just going through the process of putting together some articles on behalf of an auditing group, and interesting looking at how external audits has evolved over the last 12 months in terms of identifying whether businesses really do have ongoing concern issues, the sorts of things that business owners should be doing to really seriously consider challenges and risks that they're going to have in the short and medium term in relation to funding and cash flow. So why do SMEs need funding? Pretty obviously, starting a business. We all need funding if we're going to start a business. Working capital to maintain operational costs as well as growth costs as businesses are growing. SMEs look for funding for asset purchases, growth funding we've talked about, and certainly debt restructuring if it's required. And we'll look at some of those opportunities as well. Peter, just a question for you. I mean, when you're working with clients and looking at funding arrangements, where do you spend most of your time having conversations? Do you move into the debt financing area, or do you spend most of your time looking at ways of equity funding?
I must admit, the people who come to me in lots of cases have been referred by their accountants, and they've already explored the debt restructuring. One of the big issues is that many of these people, whilst they might have a brilliant business concept, have either run out of money or really had no money in the first place, and therefore they've got no assets that they can secure. I normally start with, let's have a look at your mother-in-law. Has she got a spare asset you could mortgage, or anyone else within your group? And that can then lead to, well, are you aware that as long as you have got a reasonable business and a vision, you potentially could raise capital, and some capital can be raised very quick, of course, under Section 708 of the Corporations Code. Money could be raised in a couple of days. You can't advertise it, you can't promote that you're looking for money, but you can raise money of up to 2 million from 20 people. So I haven't really in the last couple of years had much to do with debt as such, because, as I said, I'm acting these days as a consultant and haven't got the ready flow of clients, and they've already talked to their accountants about that.
Yep. So I think that's a fairly typical scenario. So clients are coming to their accountants and they're looking at debt funding opportunities in the first instance. And most accountants have enough experience to be able to provide some general advice or refer clients to a specialist. In relation to equity financing, then I would think, Peter, in most cases that there would be a need to refer clients to a professional partner such as yourself, who then provide the specialist advice as part of the overall project management.
Yes, but this is part of what I was referring to before when I was talking about experts. Within ESS BIZTOOLS, we've developed a full product package to equip an accountant, business advisor, bookkeeper, with the skills to be able to advise clients on crowdsource funding, equity raising, early stage innovation company, and the key government grants which go with those type of activities, which are the research and development grant and the accelerating commercialization grant. There is a package there. I don't know if it's ever been fully developed. Prime Minister Malcolm Turnbull started this innovation strategy, as far as I'm concerned. Anyhow, other people in the government may have different answers on that, but while some people criticise Turnbull, I praise him for what he did for innovation. He put innovation on a high pedestal and said we should be encouraging. And I think we're seeing some of the results at present. Have a look at some of the companies at present, what their valuations have gone to. So what he started to put in place was that there was to be a journey from undertaking initial research, proper funding for the research and development activities. And it was only around the time he became Prime Minister, there was talk that research and development, in fact, was going to be withdrawn, especially for SMEs. I think the big end of town might have been suggesting that it was too good for SMEs. Well, that's all disappeared. You don't see any comments like that anymore. And then we had the accelerating commercialization grant put in place. Now, both sides of government have changed with the amount of that. It's currently $1 million on a 50% basis. It was talked about. It was actually $2 million under a previous Labor government. And then the other side of the Turnbull equation, of course, was early stage innovation company, which we're going to talk about a bit later, and also crowdsourced funding. So the opportunities are there, but I think for an accountant to give advice, they need to have developed some expertise. It's not a matter of reading it 5 minutes before the client comes in. They'll get caught out if they do that. They need to spend a few days reading about it, thinking about it, looking at the crowdsourced funding intermediaries' websites to get a feel for what other people are doing. But I think it's an exciting area.
Yeah, definitely, and a developing area, as you say. Certainly, we're seeing that play out in the Australian economy at the moment with some of the fintech and associated companies that are out there, growing very rapidly. So, as I said, I mean, COVID-19 has clearly brought to bear some of the challenges that firms have in relation to cash flow management, and I think, in the first instance, this provides a real opportunity for advisory accountants to sit down with their clients and start to put together some financial forecasts, both realistic and pessimistic forecasts based on what they know is happening and what's likely to happen in the marketplace. So that's almost a necessity at this point in time, and not only in terms of businesses that are struggling, but businesses that see real opportunities and that see the value in perhaps looking for some additional funding to invest in growth and other areas of focus. In the short term, I've said government grants are phasing out. When I say government grants, I just mean, Peter, the COVID-related grants, not government grants in general, of course, but that is a consideration at the moment from looking ahead to 2022 and beyond.
Well, hopefully out of all this COVID, there's got to be some bright spots. Hopefully a lot more of the accounting profession now appreciate there are government grants and they are quite significant, and there's hundreds of them, and offered by all levels of government. In fact, even some local government organisations, councils around Australia have got grants for businesses opening in their council areas. So there's an opportunity there for accountants to become, again, using that word expert, perhaps all we should say is more knowledgeable, so that they can clearly identify. And we've got a product to assist them to find those grants so that they can be conscious of them, to talk to their clients about them, because a lot of people don't know about the individual grants, and these can really help some businesses to get on their feet.
Yeah, and you want to be in a position where you're advising a client to pursue those opportunities rather than have the client come to you 2 years down the track and say, "Why didn't you tell me about this?"
Oh yeah, and I've seen businesses leave accountants because they were not told about grants. They don't get much joy out of finding out that one of their competitors has received a government grant and they have never been told about it. I think it's very important for accountants, if there are grants out for particular industries, let your clients in those industries know. Then it's obviously up to the client. The client's the one that's got to take action. They've got to say, yes, we want you to do something, but I think it's pretty dangerous not to tell them about them.
Yeah, so with a tool like ESS BizGrants, I'm assuming that an in-depth knowledge of each individual grant is not required, but an understanding of how those grants operate and the process by which business clients can identify those opportunities is what's needed.
Yes, well, that grant finder, the first step is for the accountancy firm to insert answers to about 9 or 10 key questions, and they're basically on the type of entity to start with. The highest level of grants are awarded to companies, but sole traders, partnership, trusts can all get grants. They won't get as many as what a company gets. The industry they're in, the number of employees, the years in business, all comes into play. They're fairly basic. And then the industry number, the number that you insert into the tax file, helps. Just make sure that still describes what the company's doing. We've found a couple of instances where a 20-year-old company, it was originally given a particular reference number from the Australian Bureau of Statistics classifications, which the ATO has amended a little bit. And over the years, the business has changed. So the business is now wanting to get another grant. And initially, someone will tell me the number that it is, and we go through and we can't find any grants or very few. And I say, what did you tell me that they do? And they tell you something completely different. So because the ATO don't appear to be policing that, they don't seem to worry about it, that number, it can be misleading when you're trying to find grants. So you need to make sure that that code is current for the client.
Yep. Okay, so there's some good reference points there for consideration in relation to those grants. Key issues that all accountants in public practice should be aware of and should be discussing with business clients anyway, focus on cash flow management. As we said, identifying funding options, and Peter's already outlined those. We'll just briefly go through those shortly. In order to take advantage of those opportunities, then some element of business strategic planning, financial forecasting is inevitably required. So that, again, provides an opportunity to add value when clients are starting to explore these opportunities. And there are also opportunities around merger and acquisition, succession and sale as well. So these are all areas of focus that virtual CFOs, business advisors working with their clients need to be focusing on an ongoing basis, having those conversations, particularly at this point in time. And I suspect you're probably already having those conversations on an ad hoc basis anyway with a lot of your business clients as you finish the 2020 financial year returns, and clients are starting to think about what the year ahead looks like. For some, it looks very, very positive. For others, for many others, it'll be a real struggle until business starts to pick up again properly. So from my point of view, I think, yes, we become an expert in specific areas of focus, but we also make sure that we focus on providing a holistic advisory service to our clients with all of these potential areas of focus available. Obviously, then we have a discussion about debt versus equity. So Peter made the interesting observation at the beginning of the session about most accountants probably having that conversation about debt up front, and then perhaps starting to look at external experts in terms of equity funding opportunities. But from what you're telling me, Peter, the equity funding side of things is growing dramatically, and there are real opportunities for firms that want to take advantage of that.
Yes, there was a report released in the last couple of weeks by Equitise. Equitise is a Sydney-based crowdsourced funding intermediary, and they do other finance industry work. They originally established in New Zealand because New Zealand had crowdsourced funding equity raising about 5 or 6 years in front of Australia. So they went over there and started. Their report has indicated the uptake of crowdsourced funding in Australia in the last 12 months was up 125% on the previous year. So after 3 years of crowdsourced funding, equity raising in Australia, the capital raise would be up around $100 million. Now, it's still in its infancy, and there's been a lot of things learned, but it gives the companies the opportunity of being able to raise money. Now, they can raise $5 million in a 12-month period, but the average raise is around $650,000. And a company can go back as long as the market supports them. I think it's an interesting area, and there are certain peculiarities about these businesses that help them, and this is just all part of the planning. They need to really have a fan base or customers, but that helps every business, doesn't it? We all need fan bases or customers, and because they can be people who can be very interested in joining the game, if you like, and having some capital in the business.
Yep. No, really interesting. Equity financing strategies, Peter, you've talked through most of these, crowdsourced funding. Early stage innovation, how much is that being taken up now at this point in time?
Unfortunately, it's very difficult to get information. I can only get it from talking to some of the crowdsourced funding intermediaries or looking at their websites. There is some, but it's probably not as significant as crowdsourced funding because it's a lot narrower. The entity definitely has to be under 6 years of age, but the real priority is under 3 years of age.
Yeah.
And there is a turnover restriction of $1 million and a income restriction of $200,000, both in the previous financial year. The income doesn't include any income from a accelerating commercialization grant, so they're fairly narrow. Perhaps they're a little bit too narrow. I would have preferred it to have been a bit longer than the prime objective of 3 years. I think 5 or 6 years is that, and maybe another 2 or 3 years for the category that can be classified as 6 years at present.
Yep.
It does take a long time for innovation to be undertaken, but it's there. The real benefit is that the company raises some capital, and this is basically under the Section 708 of the Corporations Act. That's where they're raising. So you don't incorporate an early stage innovation company right from the start. It's you get an approval for that classification that's issued by Oz Industry and the tax office, because the company has met certain characteristics, as I just said, on turnover, on age, and on income, and on what it's been doing. So you don't go out and incorporate it. You incorporate a normal company, which is basically under Section 708 of the Corporations Act, and then you apply. You can self-assess under one set of tests, but a lot of people will be doing it under where they complete the assessments and then have to submit it to the ATO and Oz Industry for a ruling, and that takes about 6 weeks. But then the ATO issue a certificate to say that they've accepted that XYZ is eligible to call itself an early stage innovation company. And then the company becomes attractive to potential investors, because it's the investors that Mr. Turnbull was trying to attract. He was trying to put a neon sign on top of some companies and saying to investors, come and invest with me and you'll get some taxation benefits.
Yep. Yeah, absolutely. So do you think there's a lot of conversation around at the moment in relation to equity financing? Is it a hot topic for the businesses you work with?
The intermediaries are saying that they're busy,
yep.
but there are, on my reckoning, it's a bit like seems like a bit of a secret list, but as everyone understands, there are 16 intermediaries appointed in Australia by ASIC. 3, or in fact 2, are dominating the market. That's Birchal out of Melbourne and Equitise out of Sydney. There is another New Zealand Australian company called Pledge Me, which is based in Brisbane. And they're the top 3, but the first 2 have got a significant amount of the market, like over 80%.
Yeah.
The others seem to be very patchy on what they're doing. They don't seem to be doing too much at all. So, but the Equitise and Birchal are both saying they are very busy.
Yep.
In fact, this report that Equitise has just released indicates that they are only agreeing to participate in 5% of the people who approach them. So it's, I think what it's highlighting is a fear I've had all along, and it's why I wrote the material on early stage innovation company. People are not getting the right advice before they go to an intermediary. Intermediaries are not there to develop business plans, to develop budgets and cash flows, to train directors on corporate governance or any of that. So they would tend to send those people away and say, go away and get it all fixed up. Unfortunately, that comment or that decision of the intermediary is probably discouraging some people. And this is why I want accountants to really get involved in this opportunity to become an expert in these areas of both ESIC and also crowdsourced funding, so that the client understands what it's all about. They're equipped, they're prepared, so that when they're talking to an intermediary or another finance broker, because another finance broker can assist with early stage innovation company capital raising, that they're meeting them more on a level playing field. Yep. They're able to illustrate that they have got some knowledge and skills, and they understand the need for fans and for very strong social media activities. And this might mean that if an accountant has this discussion, and perhaps they could refer them to me or other people who are advising this area, it might mean that a company's got to stall for their actual attempt to raise capital for 12 months to get their act together.
But at least they know
first. That's right.
Yeah.
But I suspect what's happening, some people are going to their accountants and they're saying, oh, we don't know much about this. Why don't you just go up and see the intermediaries? They go and see the intermediaries and they're giving them a 0 to start with. And some of them are then throwing the towel in. And that's, I don't like that because they've already taken the initiative to put a business together. I think as a profession, we need to be supporting them.
Yep. No, absolutely. There's real opportunity. And obviously the other side of things is debt financing strategies, most of which we're pretty much aware of: business loans, line of credit, invoice discounting, where loans secured against outstanding invoices is certainly around. Factoring, I find, has a bit of a mixed reception. But it still exists, and in some cases, it's an appropriate strategy.
And it's very important for some people is their financing mechanism. Sure, there's interest costs. There's interest costs in everything, one way or another, isn't there?
Yep, definitely. Debtor fee funding, which many accounting firms use themselves with their clients. So certainly familiar with that. Equipment leasing and asset finance, which can be addressed through finance broker. And I know, accounting firms, if they don't have their own internal broker, will obviously have relationships with people that they trust and to provide the right sort of advice in relation to these things. But coming back to your comment, Peter, there's a real opportunity up front for accountants to have those initial conversations, at least to have a really good understanding of the options, and then to help the business put in place whatever they need, whether it's financial forecasts, business plans, a strategic approach, or perhaps a plan for the next 12 months to be in a better position to take advantage of these opportunities.
And Dale, they need to be able to convey to the client how all this works. This is all new to the clients. They may have, some of them are fairly well prepared because they've had a look on the internet or they've read various articles, but the accountant, this is part of the becoming an expert. You've got to put some effort in, and obviously accountants understand that. They've got to do it every year for taxation matters. It's the same here, keeping up to date with what's happening, with any rules or regulations, and then being able to have that conversation with the client, because I think it's important that the client clearly understands how some of these activities work. What's this crowdsourced funding intermediary? Who are they? What's their power? What's their responsibilities? Who are they acting for?
Yeah.
And in fact, they are acting for two bosses. They're acting one for Australian Security Investment Commission, which is pretty important to them. That's the government. And that's at least 50%. In fact, when Mr. Morrison introduced this legislation when he was the Treasurer, he said that they were the gatekeeper for ASIC. They were there to make sure that for crowdsourced funding, equity raising, that the law had been complied with. ASIC has very little to do with these companies on a direct basis. I'm told they have a fair bit to do with them indirectly through the intermediaries, where they ask questions as to whether they check this and check that. The government is fairly concerned to try to reduce as far as possible business failures out of crowdsourced funding equity raising. And in early stage innovation companies, it's one of the reasons there's a $50,000 maximum investment by a retail investor. The government doesn't want people putting all of their money into one company and running the risk that in the commercial marketplace, there can be business failures. That's part of the role that the intermediary's got. But on the other side, the intermediary, when it comes to crowdsourced funding, he's a promoter. He has developed their own database of potential investors. They all claim they got between 25,000 and 50,000 of these investors, and that's who they communicate with. And they've then got to be that good, honest broker that you were just referring to. So they've got this responsibility that I don't think we're going to see any bad companies really come to light that get through the process because of this this obligation that the intermediary's got to be the ASIC representative, and then they've got to be responsible to the people who have said to them that they're prepared to look at making investments. So they're going to go through the companies and make sure that everything's right within them.
Yep, absolutely. Peter, I just wanted to finish off with 2 points. Firstly, just come back to where you started the conversation talking about the developing role of an accountant as an advisor. I really like the term a virtual CFO. I think to me it means a lot more to business owners than simply saying we provide business advice. But it places a lot more onus on the accountants, the manager or partner, to have a working knowledge of some of the things we've been talking about so that they can take on that role of CFO for their small business clients. It's no longer a big business role. And I think, given the relationship that accountants in public practice have with their clients, there's no reason why they can't start thinking of themselves as VCFOs in relation to operational and strategic planning, and providing some advice around these areas. I mean, if you're in the position where you're able to help clients develop cash flow financial forecasts, then you're in a much better position to help them identify the need for funding and then look at the opportunities that are there. As I said at the beginning, we're launching a new e-learning course called Small Business Funding Strategies for Accountants in Public Practice from November. And Peter, you've kindly agreed to participate in this course to provide your expert feedback on what's happening in the equity funding arena. So talking in more detail about some of the things we've talked about over the last half an hour. So if anybody's interested, they can visit that at cpdforaccountants.com.au.
Yes, so, I'm looking forward to that, Dale. I think that should be a very good presentation. Hopefully we'll get a lot of people.
So another fantastic diversification strategy for accountants in public practice.
Yes, there's plenty of them, isn't there?
Yep, definitely.
Okay, so you're right to come back to me now then, Dale?
Absolutely.
Okay, I'll just take it back. You close yours down, thanks.
Yep.
Just to give you a brief overview of what ESS BIZTOOLS has done to help with this diversification process, we've developed an advanced package which includes a whole range of material, and some of which we've talked about today: grants, Section 708, research and development, accelerating commercialisation grant, the early stage innovation company. We've got forms that cover you right through the process, the same with crowdsourced funding. Chief Financial Officer Services that Dale's referring to. We should have the word virtual in front of that, shouldn't we, Dale? And a range of other material which will assist you to be offering this broader range of diversified services as envisaged by the CommBank Accounting Market Pulse report without you having to spend hundreds of hours in developing the material yourself. We've got a special discount today, which is for clients of 4 accountants, which Dale's one of Dale's business. I don't know you keep up with all this, Dale. 4 accountants, CPD for accountants, and high-tech soft touch consultancy business. And that subscription is normally $6,500. Special price is $3,000. This has been reduced because of the problems of lockdowns. We're appreciative of the problems, especially in New South Wales and Victoria at present, but it's also affecting other areas. I live in Queensland, and I know certain tourism areas are really suffering. Cairns, the Whitsunday, Sunshine Coast, Gold Coast. So we've reduced our pricing for that if you're interested. If you're just wanting to start off in offering advisory services, the package I really suggest is our starter package. It will help you get started. It's got a tradies charge out rate calculator, professional services, charge out rate calculator. One of our new clients uses it for tradies. He's got over 110 clients using it. And then he prepares monthly financials and has a monthly boarded review advice, which he's earning an extra $5,000 to $7,000 per client. He's got 110 of those, so you can do the sums. He's created a nice little income earn out of those, and he's got happy clients. You can also have a retail or wholesaler product mix and markup rates, which is helping your clients in those categories to try to manipulate what's happening in their stores so they can still trade at a profit. They don't want to just sell cash cow type products, but unfortunately we can't all be selling stars all the time. So it's how they promote and market and lay out their stores is the big thing to try to get a better overall bottom line result. Also includes a debtor systems review. Australia's still got the highest or one of the highest debtors days outstanding in the world. I think it's a national disgrace, so we should be doing something about it. Survival in difficult times is 38 questionnaires which help you to evaluate a client's performance. And we've got business health checks, which is going a bit further than benchmarking. So we've got a special discount for Dale's clients and supporters for this package, which is where I really suggest you start if you're going down the business advisory services path and you're not already in it. Now, some people come to me and they're already earning 20% of their fees from business advisory services. They should start with the advanced package. But if you are only currently getting 1 or 2% or even 0 out of business advisory services, I'd be starting with the what we've included in our starter package. It's normally $2,100, but we have a special on at present, $900 for 12 months, and that includes GST. So if you're interested in subscribing, please go to our website, www.essbiztools.com.au, then click on subscribe, and you either click on to advanced package or starter package. And we've got a discount code, so you can please write this down, APFA, because those prices I'm listing there are special for Dale's group of supporters, APFA, and that will get you access to that. If you're going for this, so the APFA was for the advanced package. If you're going to subscribe or you for the starter package, it's BASSPFA. I'll repeat that, BASSPFA. Now, if you can't remember those or you didn't get your pen quick enough, please send me an email, peter@essbiztools.com.au, and I will send you the details. So Dale, thank you very much for, I'll just go back to Dale. Thank you very much for being with us today.
Thanks, Peter.
I hope that you will continue to develop the material that you are developing. around your various interests in supporting the development of the Australian accounting market.
Cheers. Thank you, Peter.
Thank you.
Too. Cheers.
Thanks, everyone. Have a great day. Thank you. Bye.